Hello everyone! It's Ashton with Keller Williams Realty coming to you live every Wednesday to answer your real estate questions. Today I have Scott. Okay. Go ahead, introduce yourself.
This is Scott Haggerty from the Touche team at Caliber Home Loans in Bothell, and we're here to talk about how interest rates affect your buying power.
Yeah, absolutely. I have buyers that come to me every week that say that they're waiting. They're waiting until when the market goes down.
Yep.
If the market goes down and prices decrease, to be able to buy. And I really want to show you guys that it doesn't really matter what your home price is so much as it really matters what the interest rate is, because that will be how much you can actually qualify for and what your monthly payment is, which at the end of the day is really what should be most comfortable for you. You should make sure that you can pay your monthly payment, and that's a comfortable number rather than the grand scheme of, oh my gosh, a $500,000 house.
Yeah, okay. Making your payment and then also qualifying for the loan in the first place, really. So, yeah.
So go ahead and show us exactly what interest rates are doing right now, and then we'll talk about how that impacts your buying power.
Yeah. I want to do like a super brief history lesson because it's fun and I'm a history dork, and then I want you to ignore most of it. It's just kind of hilarious. Back in the days of yore, rates were low-ish, but still higher than they are now. But if you were buying a home in 1981, even if you were a well-qualified buyer, your rate was probably 18-19%. Insane.
Ouch.
I remember being told that by one of my last bosses, that when he bought in like 1985, that his rate was like 16%. I was just like,
that's so painful.
But through time, I just squiggled because there's some ups and downs, a few recessions. We hit a low point in about like 2016 of 3.47, and everyone went, "Oh my God!" That was the lowest rate that there ever been. 3.5% was the lowest freaking rate. Under 4 was unheard of. And they squiggled around, peaked back at around 4%. And then if you were lucky enough to buy in December of last year or January of this year, you may have gotten in on this tiny dip of about 2.65%-ish.
Wow.
So
this past year has been the lowest it's ever been.
Ever.
Literally ever.
Well, 2016 was the lowest it's ever been, and then there was another low point.
And this is almost a full percent lower.
And just like free money, essentially, like in the history of lending, it's borderline, like unheard of. No one ever thought the rates dipped under 5%. It was amazing. I remember I got my first loan and it was 5.25, 5.25, and I was like, all right.
Yeah.
And then we refied a few minutes later, my credit had come up, we had equity in the home, and I got 4.125. That was amazing. So rates are a full percent lower than that now, and it's wild. So
it's just crazy.
Now is a really good time. Here comes the but. But what we we this year is, so we hit the low
December,
January. If you're buying
year.
then or refinancing then, kudos, congratulations, you did really well. But since January, let's see, let's call that, yeah, we'll just call that 3% about there. And this is January. Since January, it has gone up, kind of down, up again, and squiggle. Most recently, we hit a peak again, one of the kind of the higher peaks in the last year. It's dipped down now, but the trend is that way. And so that is, everyone saw the trend over the last
we're going down.
40 years to there.
And now we're coming back up.
And now what we're seeing is up.
So when COVID hit, there was a lot of money that was funneled into relief, and the banks were sort of bailed out by government programs and that sort of thing in order to keep the economy going, and that's why we're seeing these crazy low interest rates, right?
Yeah, it was a huge driver. Fed cut interest rates. There was massive stimulus, mortgage forbearance, a huge number of factors really kind of compounded to create this, I'm not going to call it artificially low, but like a very unbelievably low rate that we will probably never see again. And so that was our point here, just January last year, about 9 months ago. And rates are still low for good qualified buyers. We're still hovering a little over 3%, which is in the history of lending
still
unheard of.
Crazy low.
Unheard of. Yeah.
But now that COVID is starting to pass, these programs are going out. We are seeing the trend upwards, and we're expecting it to continue.
Yeah, right. And Fed has begun raising interest rates. A lot of the stimulus programs, a lot of unemployment, and kind of those benefits are drying up, and it is like all those different factors are combining to drive rates back up.
Okay. So what does that mean for the average home buyer? Right now in Snohomish County, the average home is selling for $750,000.
Okay. So I ran two sets of numbers. It's
super surprising, $750,000 right now.
Wild. It's wild.
Snohomish County.
So I ran two sets of numbers. One is just kind of like, if you're first-time home buyer, you're just trying to find that deal, get your foot in the door, stop paying rent, stop paying a lease, stop flushing money down the drain and getting no value.
Right.
So let's say you're able to find something for $400,000.
Wow. Okay.
So hard to do, but they're out there.
They are.
You can find them, especially if you want to put some bubble grease in and fix it up yourself. You don't mind a little drive. Doable. You can find it.
Okay.
The everyday practical difference that it's going to make you, I didn't write down what the actual payment is, because that depends on a bunch of factors, but what the difference is when you go from 3%, which we're at about now, we're probably slightly above, but we're trending up. The difference from 3 to 3.5%, which I think we're probably going to get to somewhat quickly, the difference that's going to make in your payment each month is about $93.66, $100 a month for 0.5%.
About $100 a month for every 0.5% that's increased.
And that would continue to 4% would be another $93.66, and on and on. So, and no one can predict where rates are going to be, other than that this is the trend that we're seeing, and no one's really expecting it to reverse.
Right.
So that sort of increase as rates creep up. And so that's every day.
So $100 a month isn't just an additional $100 a month for their mortgage. That can actually impact if they can even qualify for this loan.
Yeah, it's kind of two factors. It's what your monthly payment is and how you're doing on groceries, insurance, cable bill, anything like that. But it's also something that the bank is going to look at when you're looking to qualify. They're going to look at what your money in is, a debt to income, what your money in is versus money out. And another $100 might be, or more as rates creep up, might be that make or break for someone to qualify for that loan.
Right.
Yeah.
Okay. And as $400,000 is a very hard fund in Snohomish County right now. Looking up towards Skagit County is absolutely doable, but right now in Snohomish County, let's give me some numbers for something that's maybe more likely found.
A little more doable.
Yeah.
I'm guessing some of those Snohomish County numbers are probably more from the south part, where properties are $1 million plus often. It's crazy. So I did another set of numbers, at 650K,
Okay.
which is probably pretty doable. We're in
Yeah.
Marysville. I think you can definitely find a home around here for that.
Absolutely.
And the same thing, there's going to be some factors on what your actual payment is. It depends on your credit score, that sort of thing. But the difference, again, from 3 to 3.5%, and then going up for each 0.5%, your difference in buying power is going to be about $152.20.
$152
for
a month.
every 0.5%.
For every 0.5%.
that rates change. Yes.
Wow.
Yeah.
So if we waited a few months next year, we're gonna buy next year after the holidays in the spring, and we've been pre-approved for $650,000. One, your pre-approval is only good for 90 days. Okay, so you have to get pre-approved in the spring.
You probably have to do all the rigmarole of providing documents,
You have to go through it all again.
pulling credits.
And if we can get pre-approved at 500 or 650,000 again, but interest rates are different, that means that what I thought I was paying right now at, I don't know what 650,000 payment might be, but I might be looking at paying $2,400 a month. Then all of a sudden I get hit with an extra $300 because it's jumped up a full %. That's a hard pill for me to swallow. I mean, if I was a renter right now and I found out that my landlord is increasing my rent by $150 or $300 a month, that would, my brain would explode.
$300 a month is a modest car payment. That is make or break.
That's a huge dollar amount.
Yeah, I'd say, right now we're probably, if you put a lot down, amazing credit, you might get around 3. Realistic is probably 3.25. And so, easily within the next year, seeing that go to maybe 3.75 or up. Plausible? Possible? Okay, I can't predict. I'm not going to say what it will or won't do. I have no idea.
Yeah.
But we are seeing that upward trend, and I would say, since December, January, this last year, we've seen rates come up about 0.8%
Okay.
already.
Almost a full
A big
percent.
difference.
Yeah.
And so, what it would also kind of, not just like, if you know you're going to buy at $650,000 and your rate creeps up 0.5%, you're going to pay $152 more.
Mm-hmm.
Or if you know what your max expenditure is per month, what your free cash is to pay for a lease or a homeowner, that sort of thing, and rates creep up 100%, it means you can essentially afford 10% less home. So right now, if you qualified at $650K and we're at 3.25%, but that's your max, that's your absolute max, and rates creep up to 3.75.
You no longer qualify for 650.
You no longer qualify for
You would
650
qualify for-
you'd be looking at like 585.
So the market,
reduction of your buying power.
the price of the market would have to drop significantly for you to be able to even afford the same house.
Massively, yeah. So for each,
So you'd be paying more for it, and you'd be able to buy less.
a little mistaken, I kind of doubled here. So
That's-
for each full percent, where did my eraser go? Did I put it down or did I put it on my pad?
I'm not sure.
No, excuse me. This is my first time doing one of these. So for each full percentage point instead of half, we're basing on halves. For each full percentage point, you're looking at about 10% buying power.
Okay, so if it went a full percentage point difference, $300
Yeah, so-
instead of $152,
Yeah.
then
So-
we'd be looking at,
Yeah, so if you're at 3.25 and let's say rates really went up and we reached 4.25, then you'd be looking at 585. But if they went from, so it's at 65, 32, so you'd probably be looking at for 0.5%, 613-ish, that neighborhood. But
that's still a pretty hefty jump. The houses that I can show a $600,000 buyer look different than the houses I can show a $650,000 buyer.
Yeah, and especially if you're looking at a desirable place and you need to be able to come in and make a strong offer, having $20,000 or $30,000 less to be able to be pre-qualified for, to negotiate with, can make a really big impact on whether or not you get that home.
And you're paying more for it.
And you're still, yeah, you're paying more for it.
You're paying more for it, and you can spend less. That's a huge deal. If you guys have any questions about purchasing a home, negotiating, finding a home, I'd love to be able to answer your questions. Go ahead and message me or comment down below. If you have any questions about loan, financing your home, getting pre-approved, anything like that, please reach out to Scott. I've tagged him and he will also be in the comments below with his contact information. So definitely reach out to Scott at Caliber Home Loans if you guys have any questions about getting pre-approved. I think this is a really good, like, tangible thing that buyers can be able to see how much exactly the interest rate is really making a difference and the amount that you can get pre-approved for, and the amount I'm paying every month. That's huge. We're not even looking about at like over 30 years. I spent $300 more a month over 30 years. I'm paying way more for that house over time.
With compound interest, 0.5% is, instead of being linear, it's exponential. The more you would spend is pretty loony. So
right now is a great time for a buyer to get pre-approved, even with prices being as crazy as they are.
Yeah, for sure.
All right. Thanks so much, guys. Please reach out and let us know if you have questions that you want us to tackle next week.